Okay, so continuing, I just want to draw your attention. It's one of the highly examinable objective tests. Um, the question I asked Richmond, that in which ledger would you find the sales account? And mostly students pick sales ledger because they feel, oh, sales account should be in the sales ledger. But please learn it from me today. The sales account will be in the general ledger because the sales ledger keeps only debtors, and debtors are persons. The same applies to the purchases ledger. It will not keep the purchases account. The purchases account will go to the general ledger. The purchases ledger keeps only account of creditors who are also persons. So most often times we could say that the sales ledger and the purchases ledger are personal ledgers. Personal ledgers because they keep account of people, okay, as well as the private ledger. It also keeps account of what relates to the owner, who is a person. So these three are personal ledgers. Okay, thank you very much. So I feel there's no question. I don't know if I want to ask another question. No, but I think all the questions are duly answered, so we can move on. Now, it is important for us to discuss where you would get information to be able to prepare these books of account. So as an accountant, when you enter a business and they ask you to record their transactions, how would you get the information to record the transactions? You can't go and ask people that, oh, what did you buy today? No, that will not be professional. So your first point of call will be to certain document we call source document, source document, source document. And this document will give you information about every activity that has gone on in the business. We have all used source document before. At the time that we were paying school fees. So anytime you pay school fees, they give you a receipt. The receipt gives information that you have paid the fees. So a receipt is a source document. When you go to Melcom and you buy something, they issue a receipt for you. So that receipt in a way gives information about the transaction that went on in the shop. So when I say source document, these are documents that gives proof of the occurrence of a business transaction. It shows that a transaction has occurred, gives you details of a transaction. Okay, so since we are familiar with these source documents, let's quickly go through and look at the source documents you would need to prepare each of the day books. So the first one is the purchase day book. The source document we need is called the purchase invoice. The purchase invoice. And I don't know if I've shown you the invoice before, or maybe some of you have seen an invoice before. It's just a document that has the name of the business doing the selling, maybe address, contact numbers, and then most importantly, the item you are buying, the price, the quantity, and the total cost involved. That is basically about an invoice. So the purchase day book, you pick your information from a source document called the purchase invoice. And then for sales day book, you pick your sales invoice, right? Good. For return invoice, you pick a certain note called credit note. Credit note. And for return outwards, you pick a certain note called debit note. I'll speak about this credit note and debit note later within our discussions. For your cash book, you can use a lot of source document. One of them is the receipt book. So the receipt I was talking about. You see, when I don't know how many of you have paid school fees and have been issued receipt before, or you've paid for something and they issued a receipt for you. Have you ever experienced that before?
Yes, sir.
Okay. Then we also have pay-in slips. Pay-in slips is also known as deposit slip. When you go to the bank and you want to deposit money into an account, that form you fill. Sometimes the colors differ. Some banks, they have yellow and green. Somewhere it's pink. The colors vary depending on the bank. Okay. So that one is the pay-in slip or deposit slip. And then when you want to withdraw money from your bank account, you can either use the check, or we also have what we call a withdrawal slip. You fill that form and you can get your money. And then we also have the bank statement. Bank statement. A check counterfoil. Let me speak about that one. A check counterfoil. I want to believe we've all seen a check before, a checkbook before. When you pick a checkbook and you open it, you see you have the leaf where you write the amount and you sign, and then you tear it to give to the teller. When you tear it, a small portion is left in the checkbook. That is the counterfoil. I think I'll take a picture of my checkbook and show it to you on the page for a check counterfoil. Okay, so for the cash book, it has a lot of source document. You can use the bank statement, the receipt books, deposit books, or paying slips, etc. Petty cash book. That one we use what we call petty cash voucher. The petty cash voucher is also basically just a sheet of paper designed by a business to take care of expenses that you would not ordinarily get a receipt. So for example, when you go to okay, you are students, so you would even appreciate St. Augustine student. If you are moving from the gate to, let's say, Bacano or Ola, and you take a Pragya, the Pragya driver cannot give you a receipt. If you are moving from Wesley Girls to, let's say, Pedu Junction, the driver will not give you a receipt. Taxi drivers don't issue receipt, to the best of my knowledge. So if you need something to prove that, yes, you took a car from this place to this place in business transaction, then you have to get a petty cash voucher. And to authenticate this voucher, your head of department or your supervisor needs to sign or endorse it. And that's all. Okay, the general journal, that one uses a lot of what do you call it, source document. So we have the journal vouchers. That one is also designed by the business. You have invoice of purchase or sale of assets, etc. So these are few things you need to pick up. You can be asked in an exams to state the source document for these day books. So take note of them. In appropriate time, I think I'll show you pictures of them so you can appreciate. Any question up to this point? Okay, no and yes and no. So let's move on. Frank, you have a question? Okay. So now we need.
So please, what is the source document?
Okay, so you can pen it down. A source document is a document that gives proof, P-R-O-O-F, proof of the occurrence of a business transaction. So example, if you pay school fees, what gives proof that you have paid the school fees? And that will be the source document called a receipt, right? If you go to Melcom and you buy television and you go home and they ask you, where did you go? You say, I went to buy television. Probably you left the television elsewhere, so it's not with you for them to see that you bought the television. Even if it is with you, what shows that you bought it from Melcom? It is the receipt you get from Melcom that will give you that proof that you went there to buy. So a source document is a document that gives proof of the occurrence of a business transaction. Yes, Prof. Richmond.
So please, I was jotting the table down,
Okay.
but you skipped it.
Don't worry. I will share it in the page. I'll share the notes in the page, so that you can have access. So for now, you just pick few details. I'll share the full notes with you on the page. Thank you. So my dear lady and gentlemen, we need to now look at the format of these books and how to prepare them. So the format of the day books, the format of the day books. Fortunately for us, the first 4 day books, that is the purchases day book, sales day book, return inwards and return outwards. Let me highlight those. These first 4, they have the same format. When I say the same format, I mean the columns are the same for all these 4. And then the remaining 3, they come with different formats. So let's look at the first 4, which is the sales, the purchases, and the return inwards. So let me show you here on this page. Okay, so this is how they look like. So the first column is the date. Richmond, your hand is still up. Do you have a question still? Okay, so the first column is the date. The second column is details, but use particulars. And the third column is details, and the last column is the amount column. Now let me explain these columns and what each of them is used for. I think the date is self-explanatory. That is where you put the transaction occurred. Now the particulars pick the name. Remember, we are talking about the sales day book, purchase day book, return inwards, and return outwards. Now these books deal with persons, right? Because if you are selling, you sell to somebody, a person. If you are purchasing, you purchase from a person. If anybody is going to return goods to you, the person will be a person. I don't know if that makes sense. If you are returning goods to somebody, that somebody will be a person. So they deal with persons. So the particular here will be the name of the person you are selling to, or the name of the person you are purchasing from, or the name of the person who returned the goods, or the name of the person you return the goods to. So it normally takes the name of the person. Or sometimes the details on the item you bought. Maybe you bought 20 iron rods, 10 bags of cement. You can put all those under the particulars. Then the details here. The details here is where we do some calculations where needed. Like I just mentioned, sometimes you can buy, let's say, 3 different items, maybe 100 bags of cement, 15 iron rods, and maybe 3 buckets of paint. So you see that you need to add all these things to be able to get the total amount. So the details here is used for doing those calculations or workings. And then the final figure comes under the amount column. So these are the 4 standard columns that these 4 day books all have. So if it is the sales day book, you just write the sales day book on top like that, and that's all. If it is purchases, you write purchases day book, and you are good to go. If it's return inwards, return inwards day book. That's all. If you don't prefer the day book, you can also use the journal. So return inwards journal, sales journal. Okay. But the other names, it doesn't sound well when you say sales subsidiary book, even though you will not be marked down. Either use the day book or the journal. That is the best. Okay. So any questions before we continue? Good. So we now know the format for the first 4, but we'll pick them one by one, go through each of them. So picking on the sales, right? So the date, the particulars, sorry, it should be particulars, the details, and then amount. So in this sales journal, I have just put in some transactions in there just for our use. So we have 1st January 2002. Then the name of the person we sold to. So that's the data, right? Because remember, this book only records credit sales, and credit sales will bring debtors to the business. So we see here is a data, and we put the amount there. On the 5th, we also sold goods to Amma, so Amma, and then we put the amount there. Now, what I want you to pay attention to is that at the end of the period, when you have finished recording all your credit sales, you need to total, okay, you need to total the amount and then give a details that this is the total credit sales of the business. And this total credit sales will be transferred into the sales account in the general ledger. I think when we start examples, you would appreciate better. But you need that total and then label it as total credit sales. And that total credit sales should be transferred to the sales account in the general ledger, because we know that the sales account is in the general ledger. Then look at the date here. You use the closing date. So that is what you do when you have finished putting in the entries. You have to do the totals and put this closing date and this narration as well. Let me show you for the purchases and return inwards and return outwards as well. So if it is the purchases journal, same columns, dates, particulars, details, and amount. So here I have KK Limited 5,000, Listowell 2,000. Again, you need the totals, and this time you call it total credit purchases. That will be transferred to the purchases account in the general ledger. Let me show you that of return inwards and return outwards so that it will make sense. So for return inwards, again, date, particulars, details, and amount. So I have Comfort return goods to the business 120, Denzel 120. And again, you need the total and call it total return inwards transferred to return inwards account in the general ledger. So you can get some common denomination here that you would always transfer to that account in the general ledger. So if it is sales, you transfer to the sales account in the general ledger. If it is purchases, transfer to purchases account in the general ledger. If it's return inwards, transfer to return inwards account in the general ledger. So you see, it's very common and it follows through like that. Let me show you for the return outwards. So return outwards C, right? I had Juicy and Linda, and then the total return outwards transferred to return outwards account generally. And again, you use the closing date for that total. Are we good? If there are questions, please ask me. Okay, so let's take a small illustration and begin to see the reality of whatever we are discussing. Okay, so I have this question here. Let's read and do some analysis, and we can solve it together. So who is going to read a question for me? I would prefer the lady's voice. So Prof. Alexia, please read a question for us.
Illustration 1. Enter up sales and purchase journal and the return inwards and outwards journal from the following details. Then post to the customers and supplier account and show the transfer to the general ledger. 2003, May 1st, credit sales to to M. Ayodeji,
Okay.
3,000 naira.
Okay. Yeah.
T away
Uh-huh.
4.3 thousand naira.
Okay.
May 3rd, credit purchases from Y. Ejumobi,
Mm-hmm.
4,000 naira. And Kill Samson, 650 naira. May 5th, return inwards from M. Ayodeji, 250. And T away, 500 naira. May 10th, bought goods on credit from Ibada, 3,400 naira. May 13th, return outwards to Ibada, to 200 naira. May 16th, credit sale to S. Akinotain, 5,700 naira. N. Osifo, 4,700 naira. May 20th, goods bought on credit from N. Akin, 500 naira. And May 26th, goods returned by us to N. Akin, 500 naira.
Thank you very much. That was an awesome reading. I think you're fit for reading business news on television. And that is one of the professions in accounting. You can be a newsreader, specifically a business newsreader. Okay. So having read the question, I think you get the impression that the transactions are self-labeled. Some of them are credit sales, some of them are credit purchases, some of them are return inwards, some of them are return outwards. So it gives you a clue as to what to, or which books to record them appropriately, right? So make sure that you don't mix them up, number one. And if there is a transaction that does not fit, don't worry yourself recording it. Because you know that for your sales journal, you only need your credit sales. For your purchases journal, you only need your credit purchases. Return inwards, you need only the goods returned by debtors, and return outwards, only the goods returned to creditors. So these are things that should be at the fore of your mind when you are solving an illustration on these 4 journals. Okay, so let's begin. So let me shift my question here and then pop up my solution here. Okay. So here we need to open the 4 journals. So return inwards, return outwards, sales, and then so let me bring the sales first. So my sales daybook. Let me copy and open the purchases. So I'll call this one the purchase daybook. And the next one will be my return inwards. Return inwards. The last one will be the return outwards. And see everything clearly. Okay, so I have it set up, but like I advised that you always write the name of the business. In this case, the name of the business was not specifically given. We're only told, let's see, we're only told to prepare or write up the journals, but the name of the business was not given. So we are permitted if we don't also bring any name of the business. Okay, so let's read the first transaction and know which book we are taking it to. So the first one is credit sales to M. I think Prof. Alexia was at a point struggling with the names, but it doesn't matter. So credit sales to M. Ayodeji. I don't even know if that's the right pronunciation. It seems like they are all Nigerians, right? Which we give ourselves the benefit of doubt. So M. Ayodeji, 3,000 naira, and then T away, 4,300. So my dear students, where or which book would record this transaction? I think we all know the answer, the sales day book. So let's come into the sales day book. We put down the date, which is 1st May 2003. So the details would take the name of the debtor, right? Credit sales relates to debtor. So M Ayodeji. Then we put the amount there, 3,000 naira. Under the details column, we didn't do anything there because we don't need to do any calculations with respect to M Ayodeji. Okay. Then the next person is T Away on the same date. T Away. So T Away's amount is 4,300 naira. Please let me change the currency. It's supposed to be naira and not Ghana cedi. So you always need to pay attention to some of these details. And that is it. You have recorded your first credit sale in the sale journal. Very simple, very, very simple. Okay. The second transaction, which is May 3rd, credit purchases. So are we going to put it in the sales day book? Credit purchases. The answer is no. So we locate our purchases day book and record in that book 3rd May 2003. And we have the first person to be Y, Arjun Mobi. Amount of 4,000 naira. Okay, and then the next person was Kyo Samson. So Kyo Samson too was 650. Again, naira. So change the currency to naira. So you see that it's very simple, very, very simple. The next one, return invoice from M Ayodeji, 250, and T Away, 500. So this will go into the return invoice day book. So locate your return invoice day book. Return invoice day book. 5th May 2003. You have M Ayodeji, 250, and T Away was 500. T Away. Is it not simple? Students always say that teachers will solve the simple illustrations and give a tough exercise and assignment. Okay, so let's make progress. The next one is bought goods on credit. That is May 10th. Bought goods on credit from Ibada. So this one will go to, let me ask, bought goods on credit. This one will go to which one? Is it a sales journal, purchase journal, return invoice, or return outwards? Prof. Frank.
The personal account.
So which of the journals?
The general journal.
Are you saying the general journal?
Yes, sir.
Okay, why now? That transaction bought goods on credit from Ibadan. What type of transaction is that? Bought goods, is it not purchases?
Yes, sir.
So this is purchase on credit. So which book should it be in?
Purchases journal.
Exactly. I think you are thinking too much. When it looks so easy, you don't like it. So this one will go to the purchases journal, right? On 10th of May 2003. Because we bought goods on credit. So this purchase on credit. We purchase goods on credit from Ibadan. Okay. Now note that this transaction will first go into the day book. So don't even think about the ledgers for now. Keep the ledgers somewhere. We are only focusing on the day books, right? Or the journals. Okay. So 10th May, Ibadan. The amount is 3,400 naira. Okay. Then 13th, there was return outwards to Ibadan. So return outwards. So we go to the return outwards day book. Return outwards 13th May 2003. The name is Ibadan. We put the amount there, 200 naira. Okay, as simple as ABC. Then on the 16th, there was credit sales to S. Akinota and N. Osifo. So that is sales. We go into our sales day book. So 16th May 2003, we have S. Akinota, 5,700. Then on that same date, we had for N. Osifo. Also 4,700. Okay. 20th, bought goods on credit. So goods bought, that's purchases, right? So we go to our purchases day book. Also record that one there. So that's 20th May 2003. And Akin 500. And then the last one is 26th, returned goods or goods returned by us to N. Akin. So we are returning goods to N. Akin. So that's return outwards. So we go into our return outwards book. 26 May 2003. And Akin. Put the 500. And that is all. So you see, it is not difficult to prepare these books, right? Just pick the transaction. Is it credit sales? Is it credit purchases? Is it goods returned or inwards or outwards? And locate the particular book and record it there. Now, when you are done like this, you need the totals, right? So let's join the last session. This session is almost up. Let's join the last session, do the totals, and then maybe I can speak about posting to the ledgers. Or if not, we'll postpone that to our next lesson. So let's join the next class. If you have questions, feel free on what we have done so far on this particular question. Let me know in the next session when we all rejoin. So I'll see you shortly.